Second quarter results now out from Exxon Mobil. Earnings came in at $1.64 a share. That was better than estimates of $1.54. Revenue came in at $81.5 billion. Cash from operations of $11.5 billion came in below estimates. But the earnings were higher than expectations because, again, you saw higher production. This was the same story that we just saw with Chevron, where higher production made up for lower oil prices, particularly in a position where a lot of those are high-margin barrels. So the more that you can produce that are high-margin, places like the Permian Basin, the more profitable that is, and that does make up for it in the earnings. You can see right now Exxon Mobil shares are up by about 0.1%, and don't miss an exclusive interview with Exxon Mobil CEO Darren Woods. That is coming up at 8:10 Eastern Time. We're going to talk to him about a lot of issues. Where he sees oil production and oil prices going, where he sees world demand on some of these things. It'll be the first time we get to talk to him on camera about what happened with the Hess purchase going through by Chevron. So we'll talk to him about some of those things, too. And also, Joe, what you were just talking about, European Union and some of the regulatory overreach that you might see on some of these things that is hitting the oil companies as well.
Oil companies as well. There's I don't know how much I want to get into it. I've given up on pushing back on the climate alarmism with actual science. But Kimberly Strassel has a great piece, and things are changing. There's change in the air right now with Chris Wright and what's going on in terms of endangerment and that whole ruling from the Obama administration that puts CO2 in the same class as horrific particulate sulfur dioxide pollution, because down the road it could harm human health from supposedly if we had an increase in the adverse weather events. But I've talked to Darren a lot about, so you got activist shareholders that have 3 shares, and you're doing backflips, doing all these uneconomic.
ExxonMobil is not. In fact, they have shut down.
I know, but he still pushes the net zero carbon capture, all the
stuff that they've invested billions of dollars in.
I know, because they were forced to non-economic. There was a time when Big Oil was never going to invest another dime in exploration. Yeah. They were going to give it all back.
Well, that's not the case. And higher production coming.
Thank God, but it should have never been.
Chevron is part of the reason that they're able to do so well at this point.
Right. It's been a tough.
Mike Wirth will tell you that he thinks oil prices are coming down from here. That's what he said. Oil prices
are coming
from supply being high, from demand questionable. So Mike Wirth thinks that oil prices will come down from here, not push higher. And as a result, you've got to have a really strong balance sheet. That high production that they're doing, both of these companies, is what's helping them with the balance sheet. And we'll talk to him about that. Mike Wirth said their dividend is very safe. Their share buybacks levels are very safe. And he said that's because they have a very strong balance sheet. We'll talk to Darren Woods about some of those very same issues.